We had the rand steady against the dollar on Friday, but market commentary, was that it faces further losses after last week's turbulence. Certainly not what's playing out in the markets today. Further strength filtering through. What are you making of this holding pattern that the rand is managing to sustain, at least for now?
Good morning, Alishia. Well, of course, after last week's eruptions and volatility in the market, at some point we were going to get some kind of stability, and we've seen the rand taking its cue once again from that level of international risk appetite. We've seen equity markets rallying, we've seen some of the safe haven assets coming off, and as a result we've seen the rand recovering due to a temporary abating in risk aversion. And I think I use the word temporary because the problems that were sparking all this risk aversion haven't gone away. We've still got the lingering debt crisis in both Europe and the States, and we still are faced with a pretty dreary global outlook. So I'm afraid this could prove temporary, but the rand is definitely benefiting from the improved sentiment. We've seen the rand moving down towards that 707 level. That's holding for the time being. If it had to be breached to the downside, we'd be looking at kind of 696. But if 707 holds, then we're probably going to start drifting higher. Bottom line is we still like buying dollar dips in the medium term.
Where you've got that dreary economic outlook that presents itself at this stage, how much cushion do you see Asian growth providing at this stage, where we've had GDP numbers out of Japan this morning certainly coming in better than the market had been anticipated, despite showing still a contraction in that economy?
Well, Alishia, I think that's it. It's the contraction that worries me still. It definitely, as you said, was better than expected, but we're still seeing sluggish growth the world over. And, the fiscal tightening that's en route in countries like the States, we've seen it playing out in Europe now, in the UK. So, unfortunately, it just doesn't look good, and I think consumer confidence in general still remains under pressure the world over. In Asian regions, we've got monetary tightening coming through from China. So I'm afraid I just can't get optimistic about growth at this stage. I'm still fairly bearish.
Amidst that scenario, we've seen that gold price coming back a bit, and I mentioned earlier that is certainly not boding well for the local unit. But having said that, the rand hasn't been tracking that gold price of late. So just how much a bearing is the gold price said to have on rand movement?
Well, exactly. There's still that positive relationship between the rand and the gold price, but as you mentioned, it hasn't been as strong as what it traditionally is. If one looks at the long-term kind of average of that relationship, we are below that. And I think that's simply because when risk aversion is high, we've seen the gold price flourish, and at the same time we're seeing the rand coming under pressure because it's deemed to be a risky asset class. So what's feeding gold in recent weeks has actually been hindering the rand, and I think we're just seeing the flip of that playing itself out now.
Of course, we've got still a lot depending on what's going to happen in both the US and Eurozone economies, that will determine rand direction from here on out. But looking at the local economic calendar this week, we've got retail sales data being anticipated. Your broad expectations there, Michael, because it will lend to our own economic growth story at this stage.
Well, exactly. I think you're quite right in saying that the international developments are still at the forefront of people's minds, and not least of which the rand. But in terms of retail sales, we are expecting a bit of an improvement there. But we actually on Friday came out and adjusted our interest rate forecast at Standard Bank. We now only expect the Reserve Bank to start hiking rates in the third quarter of next year. And that just talks to our view that we think that growth in South Africa is going to remain fairly suppressed. And of course, that suppression is going to be aggravated by this bleak global backdrop. So sure, the retail sales figures might come out showing a little bit of an improvement, but the bottom line for us is that growth and consumer demand domestically is still not robust, and with unemployment still relatively high, we don't think that the Reserve Bank is going to be too quick to hike rates. Inflation is picking up, but we need job creation in this country, and an increase in the cost of capital, we think at this stage or too early, would be counterproductive.